Hey everybody, Dave here, Hidden Freedom Investing. In today's video, we're going to go over how to start a dividend portfolio basically in 2021. Obviously, this doesn't matter what year it is. It could be 2022. It doesn't really matter. But you found this video, so hopefully the tips in this video will get you started on your pathway to generating passive income on a monthly basis and a quarterly basis and a yearly basis. So let's not waste any time. Let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. So the first thing we're going to talk about is the making of a dividend investor, kind of how you maybe even found this video. I originally was going to title it, Dividend Investing for Dummies, but you're no dummy. You found this video, you want to invest in dividend stocks and start a dividend portfolio, so you're no dummy. But would have probably been a catchy title, right? So I decided to put, dividend investing, so easy a caveman can do it instead. So how did you find dividend investing to begin with, right? Let's talk about that a little bit here, because the making of a dividend investor often comes from trying to day trade, trying to swing trade, trying to trade options, trying to get into penny stocks and things like that, and they either blow up an account or quite possibly they just have too many losses and it just really isn't worth their time, and they kind of find that maybe investing is not for them, and some of those people may never return to investing again, hopefully not, and somehow maybe they found dividend investing and say, okay, maybe this is the way to go, and it really is, and in a lot of cases it really is. So that may be the way you found this video. Leave a comment below, let me know how you found the video. Did you blow up an account, or did you trade penny stocks, or did you swing trade, day trade, and did you take a loss? But anyways, it doesn't really matter. You made it here to this video, so let's go ahead and move on to the next section here. So dividend investing or ETFs, really I'm not going to cover that in this video, okay? In this video, we're going to specifically talk about individual stocks, building out a dividend portfolio with individual stocks, not really just straight an ETF, okay? That's really, I wouldn't call that dividend investing, really. It does pay a dividend. A lot of ETFs pay a dividend, but that's not really dividend investing through dividend paying stocks. So for the purpose of the video, we are just going to do individual stocks and kind of the process that I would select going forward if I was starting from scratch. So you're brand new to dividend investing. You have no idea how to start, how to pick stocks. You don't even know what sectors are or anything like that. So that's what we're going to look at next. So let's go ahead and kind of go through the process that I would go through if I was a brand new dividend investor. The first thing you need to understand is the sectors, right? There's 11 sectors here, okay? Real estate, consumer discretionary, utilities, consumer staples, healthcare, communications, services, financials, materials, information technology, energy, and industrial. So there's 11 sectors there, okay? So that's the first thing we need to know. We also need to know kind of what the allocations of those sectors are as well. And the best thing to do there is just kind of yank the S&P 500 ETF up like VOO, and then look at the allocations for all the sectors that they have there. That's a good place to start. It doesn't always have to be exact. You can kind of modify these things. It's a moving target. You kind of want to just mess around and put these things wherever you want. If you want more information technology, then you can put it more in information technology and less in utilities or something like that. But in general, you want to kind of follow what we have over here on the right hand side here for the S&P 500 breakout for the individual allocations. Obviously, these allocations over here don't match exactly what I have on mine, right? And that's fine. Like I said, if you want to kind of sector rotate, or you want to be in higher beta or lower beta stocks, and then yes, you could go in heavier into information technology, and you can go in lower in utilities or something like that. But you do have the ultimate flexibility there to move things around as stocks and sectors go up or come down. So now that we kind of know what the sectors are and we know what the allocations should be, or roughly about what they should be, let's go ahead and talk about the dividend stocks, or even how you pick a dividend stock. So in my opinion, what you should do is if I was starting out a dividend portfolio today, I really didn't know much about dividend stocks or anything like that. I would start with the Dividend Kings list. Okay, so those are companies that had increased their dividend consecutively for 50 plus years. All right, so here is a list of Dividend Kings right here, and some of these companies you may recognize. You know, Dover, I believe they are a elevator company, and we got 3M there. That is a very common one. And we got Altria, that's a cigarette company there. Genuine Auto Parts, Coca-Cola, which I'm sure you probably heard of, Colgate-Palmolive. I'm kind of just naming off some of the common ones. Procter & Gamble, Johnson & Johnson, Lowe's, Hormel Foods, let's see here. What's another good one? And I mean, some other. Federal Realty is a REIT, which just counts as real estate. So there is a list of Dividend Kings. So what I would do is first pick some stocks off of this list. Obviously it doesn't have the actual sectors on here, but that's fine. You can look that up. So I would probably pick, like, you know, 3M. I'd pick, you know, Coca-Cola, Colgate, Johnson & Johnson, Procter & Gamble. I'd probably just those as a minimum. And then, you know, to fill out the rest of the portfolio, we want to look at the Dividend Aristocrats list here, which should have the Dividend Kings on it, along with a bunch of other stocks that had increased their dividends for at least 25 years, but it also met some other requirements right here. So there are the requirements. So that's the second list that you should pick off of, in my opinion. So, you know, Caterpillar, I'm sure you've heard of Caterpillar, right? We see McDonald's, I'm sure you've heard of McDonald's. T. Rowe Price is pretty good. Leggett Platt's pretty good. General Dynamics, we know who they are. Cardinal Health is a good one. Aflac, that's pretty good. Here's some Kings showing up on the list. Here's a tech play that's a Dividend Aristocrat, IBM. AT&T is a fantastic stock pick there. ExxonMobil is another great pick. Clorox is another good pick there. And scrolling down here some more, Archer Daniels, another great pick. Realty Income is another fantastic pick. That would cover your real estate sector. Automatic Data Processing, that's not a bad pick. Pepsi, great pick as well. Obviously, a lot of these picks I'm partial on because they're in my dividend portfolio, which I'll show you here near the end of the video. You got Target, you got Walgreens, you got Walmart there, another great pick. Kimberly-Clark should be in everybody's portfolio, in my opinion. And we got AbbVie, which had a pretty big sell-off today just alone. So that's the second list you should pick off of. And then lastly, what I would do is pick up some, companies like Apple, Microsoft, and companies that you're, familiar with, and you may even use their products, but they're not a Dividend Aristocrat or a King. Such other companies could be, I think, Home Depot and maybe even Starbucks. They're not Dividend Aristocrats, just like Apple and Microsoft are not as well. Intel is not as well. Cisco, Cisco, the tech company. Those are great companies, but they're just not Dividend Aristocrats or Kings, at least to be a good candidate to put in your dividend portfolio. So now we know where to get a list of stocks that are quality stocks. I would also just say, bounce this off your head, right? Do you use an iPhone every day? Then maybe Apple should be in your portfolio, right? Do you use, shampoo from Procter & Gamble every day? Do you use deodorant from Procter & Gamble or Kimberly-Clark or from Johnson & Johnson? Maybe you use healthcare products from Johnson & Johnson. Maybe you use Kimberly-Clark toilet paper or something like that. Maybe it's Kleenex from one of those companies. Maybe you shop at Walmart or Target. Maybe you have a drug from AbbVie that you use. Maybe you get your utilities from Southern, or maybe you get your utilities from Duke. So, think about maybe getting into some of these stocks where these products every day. You either use them or you get services from them or something like that, or you've used them in the past. Maybe you get paid through ADP, services from your company. So that's another company that you may have heard of, right? Maybe you drink Pepsi, maybe you drink Coke, maybe you want to invest in those. Maybe you actually bank through JP Morgan or Wells Fargo or any of those other banks out there, Discover, or maybe have a credit card through Discover or Capital One. But obviously I didn't talk about banks on here, but financials is a big part, but none of the banks are really Dividend Aristocrats or Kings, so you really need to pick at least one of those out to fill out your dividend portfolio for the financial sector. I'm so glad you found dividend investing. Go ahead and like and subscribe for future dividend videos. So now we've talked about stocks in your dividend portfolio, the allocations and whatnot. We know about the different sectors and stuff. We didn't really talk about how many stocks you should have in your dividend portfolio. I would say, size is going to matter here. You don't have a big portfolio or don't have a lot of money to invest. You're still just starting to build this out. You have $5,000 or something like that. Then you don't want to go into 100 stocks because it could get discouraging. So depending on how much cash you have, that kind of would determine how many stocks you have, at least starting out, right? Eventually you're going up to 50, 100, $200,000 or whatever in your dividend portfolio. You should really have multiple stocks for every sector, at least for a majority of the sectors. You should at least have 2 stocks, 3 stocks maybe, because a lot of these companies that we even mentioned in this portfolio video are in the same sector. Like consumer staples, for example, has a lot of good stocks in there you just really don't want to pass up. Same thing with technology, right? There's a lot of good stocks to put in there as well, and that could just eat up all of your capital that you're going to invest in here, and leaving some of the other sectors with 0 stocks, which would not be a smart thing to do, in my opinion. You really need to diversify into all the sectors, in my opinion, as best you can. There's a little bit of leeway there. It's going to depend on how much cash you're actually going to invest in. $5,000, $10,000, $20,000, $30,000. From the get-go, right? If you're starting with $1,000, then maybe just 2 stocks, maybe 3 stocks. I really don't know, how to break that out. That's kind of a personal basis there. But you want to kind of diversify as you can going forward to protect yourself from sector rotation or some news coming out about a certain company, or possibly even certain sectors just getting hit, like we recently had the tech wreck. So how often do you want to check in on your companies, right? Well, you probably heard that individual stocks, they're just, they're too difficult, there's too much going on, I got to do a lot of research, I got to check in on these companies every single month or every week or every quarter, I got to listen to every conference call. No, that is not what you need to do. All right, I'd say at least you need to check in maybe once a year. Some companies you might want to check in maybe every quarter, but not every stock you need to do that. Okay, you're investing in the best companies in the world. There's no reason that you need to check in on these companies every single month, every single quarter, okay, unless you want to, all right? You don't have to though, all right? So do you need to check in, like say Apple every single month? No, you don't. Okay, so there is some companies that might want to check in every quarter. AT&T is a good example there. AT&T is doing fine, by the way, but maybe you want to make sure that's going the direction you want it to go in. They're not taking on more debt, so maybe you want to follow that one every quarter. But you don't have to, okay? You want to check in the company at least once a year, make sure it's not going downhill like GE did, like Enron did. Some companies might go away too quickly anyway, and you wouldn't have time, but that's the reason why you diversify. Okay, so you don't need to check in your companies. You're investing in the best companies in the world, stuff that stuff that you use, and there's no reason that you need to be checking on it that much. I don't care what any other YouTuber says. A lot of times they're just doing research and stuff because they need to make content for their video. Don't think that you need to do the same thing unless you want to. So that kind of leaves us with a broker. Which broker should you use for your dividend portfolio? Okay, now I've used a lot of brokers over the years, a lot of brokers. I would say M1 Finance would be a good place to start. E-Trade, TD Ameritrade, Schwab, Fidelity are all good choices as well. I don't really think that, Robinhood, I don't know. Robinhood probably okay too, but don't quote me on that. In my opinion, you should be with a little bit better broker than Robinhood. But it is what it is. If that's all you have, that's better than nothing. Get started, right? I want you to get started. That way you can start having dividends coming in. You can start getting excited, and you can start compounding those dividends quickly. I'd say one thing that you want with a broker is you want to have the DRIP option. Okay, you want to have dividend reinvestment program. You want to have some sort of dividend reinvestment program that the broker offers. Okay, that means that when a dividend comes in, it comes into the broker, and the broker is going to reinvest that dividend usually right back into that same company. And that brings us to the second point here. You want your DRIP to fractional DRIP. So you need to have a broker that supports fractional DRIP. Okay, at a minimum. All right, you can also find a broker that allows you to buy fractional shares as well. Okay, not fractional DRIP, but fractional shares. I'd say those two things right there are crucial. Actually, three things are crucial. Dividend reinvestment program, fractional DRIP, and even possibly fractional purchase. And then the last thing we'll talk about here is auto invest. I'd say you want to go with a broker that allows you to auto invest. M1 Finance is great for this, by the way. So you want to set it up, $100 a week, $200 a week, $500 a week, $1,000 a month, $500 a month, whatever you can, afford to invest. More the better, right? If you have to start out with $200 a month or something like that, then do it. Okay, pay yourself first, pay the government last. Okay. I'd say with auto invest that you want to have it invest, either back into the same positions you already have in your dividend portfolio, or maybe even want to build out a new position. That's up to you. Maybe you want to save your capital in your broker until you have enough capital to start a new position. Okay, now that doesn't matter so much if you have fractional purchase. You can buy a fraction of an Apple or something like that if you wanted to. But I think auto invest is great for new investors because that will, kind of just put it on automatic for you. You don't have to really think about it. The money comes out of your checking account. It gets put into your dividend portfolio and gets invested. Okay, now M1 is specifically allows you to have allocations on your whole portfolio and your pies, which is nice because it will, if you put $100 in M1 Finance, it will spread out the $100 across all your positions and actually buy some of the positions that are a little bit lower out of allocation or lower in allocation than some of the other positions that have come up. So you're thinking, Dave, when should I invest in the stock market? Should I invest right now at 52-week highs? And I say yes, you definitely want to invest as soon as possible. The more money you have invested, the more passive income you're going to make, the faster it's going to grow through something called dividend growth. All right, so every stock has a CAGR, 5-year, 1 year, 5-year, 3-year, 10-year. And that means that the dividend should grow by that CAGR on average about every single year. That is just another thing I didn't really touch on because I'm trying to keep the video somewhat short, but so yes, invest now. Okay, you don't have any time to waste. The more you get invested, the more money you're going to make. If you need to dollar cost average in because you have a larger chunk of capital to get invested, to say 10,000, 50,000, 100,000 or something like that, then maybe you want to DCA your way in, okay, dollar cost average your way in. But in general, that strategy kind of loses out compared to just lump sum investing. There's been a lot of videos done on that, a lot of studies done on it. It is what it is, but if it makes you feel comfortable DCAing in over a 4 or 5 month period or a 2-month period or something like that, then do that. But if you're young, I'd say just go all in, invest in the stock market now. You don't have time to waste. Time is not on your side. Well, I take that back. Time is on your side, but you'll start understanding that time is limited, and the more time in the market is the more returns you're going to get, the quicker it's going to grow. Dividend investing is a great way to make passive income. Go ahead and like and subscribe and hit that bell notification. The last thing we're going to look at is my dividend portfolio. I kind of, promised you I'd show you mine, so here it is here. I do have 28 positions in here, and it's graded from portfolio market value from least to greatest. So I do have Home Depot, APD there, Starbucks, Verizon, Coke, Chevron, Pfizer, ExxonMobil, Con Ed, Duke. Let's see here, AbbVie, Caterpillar, Altria, Colgate-Palmolive, Southern, Realty Income, AT&T, Procter & Gamble, Pepsi, Kimberly-Clark, McDonald's, 3M, Apple, JP Morgan, Johnson & Johnson, Microsoft, and then I also have a hybrid portfolio here. So I do have VYM in my dividend portfolio, which encompasses 400 plus stocks in it, all dividend payers. And we didn't really talk about going that route, but that could be a route you could go. That wasn't in the scope of this video. I'm also in NUSI as well, which is a QQQ or the NASDAQ 100 stocks. So that's another way to play the dividends as well. And then, just scrolling over to the right here, all those things I kind of talked about, being a king and aristocrat. So here is the aristocrat king status for all the stocks that I own. Okay, there's all the consecutive dividend years right there that they've paid a dividend. And then there's all the CAGRs that we kind of touch on as well. And if we scroll over to the left over here, we do have the annual yield that every single one of these company pays at this time. So there's the yield right there. So that is another thing that you need to consider. So that's how I would build out a dividend portfolio in 2021. If you have any questions or comments or seeing anything like that on how to build out a dividend portfolio or what I talked about in this video, leave a comment below. You can shoot me an email as well. Hit me up on Facegram. Shoot me, Instagram as well, DM or something like that. But I really tried to keep the video somewhat short and to the point as best I could. There's a lot of stuff that I could touch on. I could go in deeper on, maybe in one of these sections. If you want me to, I can go in deeper on just a single section as well. But I wanted to get the overview out there. So that's it. Go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.